What if I told you there's a business where you earn crores in revenue even when you lose? A business where your asset keeps appreciating year after year just because millions of people wear your jersey, chant your name, and fill stadiums to watch your team. Welcome to the world of sport franchises where cash flow, culture, and capital converge. For decades, the formula for franchises hasn't changed: ticket sales, sponsorships, and broadcast rights. But today, they're milking every patch and pixel, from merchandise and fantasy apps to stadium ads, YouTube content, and even Netflix docuseries. It isn't only about sports, it's a business built on emotion and scale. So what's happening to the valuations? They're exploding. And the reason is simple. Live sport is one of the last bastions of must-watch TV. Advertisers, streaming giants, and global brands are paying huge premiums for that attention. Everyone from Amazon to JioStar, from ESPN to Apple is in a bidding war for live media rights. Just look around. The NFL's 11-year deal is worth $111 billion. The NBA's new contract is $76 billion, triple its last one. Here in India, the IPL's 5-year rights sold for 48,390 crore rupees, also 3 times higher than before. And all that money is funneled straight to the franchises. The result, in just the last few years, the average NBA team valuation has doubled to $4.4 billion. The average NFL team is worth $5.9 billion, up 70%. And the average valuation of an IPL team has jumped 70% to $1.9 billion. That kind of growth has priced out even many billionaires, which is why private equity and institutional investors have stepped in. The NBA allows PE funds to own up to 30% of a team. The NFL, after years of resistance, has finally opened the door in 2024. Today, 71 major North American teams worth over $200 billion are backed by private equity. And the deals keep coming. The Boston Celtics sold this year for $6.1 billion, the biggest PE-backed NBA deal ever. Back home, CVC bought the Gujarat Titans for 5,625 crores in 2021. This year, Torrent Group's purchase of 67% stake valued the team at 11,200 crores. Even JP Morgan has launched a new sports investment banking division, proof that this is now a serious institutional play, and with the global sports market projected to nearly double from $463 billion in 2024 to $860 billion by 2033, this is no longer just a passion, it's big business. Indian teams are expanding too. Just recently, Sun TV owners of Sunrisers Hyderabad snapped up the Northern Superchargers in the UK's The 100 Cricket League for a cool £100.5 million. And earlier this year, Reliance, the force behind Mumbai Indians, picked up a 49% stake in the Oval Invincibles, giving MI an empire of 7 cricket teams across the world. For these franchises, the IPL is just the starting point. They're building global multi-league portfolios. In short, sports are no longer just entertainment. They're a new global asset class. But let's be clear, this isn't a guaranteed win. Franchise values are tied to performance, reputation, and fan engagement. When Leeds United was relegated from the Premier League, its valuation crashed from $640 million to $214 million overnight. Even in the IPL, teams that keep underperforming, think the Punjab Kings or Delhi Capitals, have seen sponsors cool off and valuations stagnate. Add to that, these assets are illiquid, capital heavy, and exposed to media cycles and league politics. So is owning a franchise profitable? Yes, when it's done right. It's a bet on passion, performance, and platforms. And as sports shift from pastime to portfolio, franchises are emerging as one of the world's most powerful new asset class. That's not just ROI, that's return on obsession.
Hey, thank you for watching this on CNBC-TV18. Hope you liked it. For more such interesting news and updates, Follow CNBC TV 18 on all the social media platforms.